In millions of American households, a letter is arriving that could dramatically change the family budget. It's a notice about the cost of health insurance for 2026, and for many, it contains a severe shock. This isn't a distant problem. It's a reality unfolding right now, and lawmakers like Congressman Deluzio of Pennsylvania are sounding the alarm. He warns that without immediate action from Congress, this is a crisis that will hit kitchen tables across the country. So, what is happening? The story centers on something called enhanced premium tax credits. To understand what those are, we need to take a quick step back. The Affordable Care Act, often called the ACA or Obamacare, created online marketplaces like healthcare.gov where people who don't get insurance from an employer can shop for a health plan. To make these plans affordable, the law included tax credits, which work like a discount to lower the monthly cost, known as a premium. Then, in 2021, the American Rescue Plan Act made these discounts even bigger and available to more people. It was a response to the economic strain of the COVID-19 pandemic. For the first time, this enhancement helped middle-income families who previously earned too much to qualify by capping their insurance costs at 8.5% of their income. It also lowered costs for people who were already getting help. These enhanced credits were so effective that enrollment in marketplace plans has more than doubled from 11.4 million people in 2020 to over 24 million in 2025. In fact, about 92% of everyone enrolled in a marketplace plan received these credits in 2025. But here's the problem. These enhanced credits were temporary. They were extended once by the Inflation Reduction Act, but that extension runs out on December 31, 2025. If Congress doesn't act to extend them again, the country is headed for what experts call a premium cliff. What does that cliff look like? Nationally, people who get financial help are projected to see their out-of-pocket premium payments more than double on average, a staggering 114% increase. The annual average cost for a subsidized enrollee is estimated to jump from $888 in 2025 to $1,904 in 2026.
Let's make that more concrete. A family of four with an income of $45,000 who might be paying nothing for their plan right now could see their annual cost leap to over $1,600. The impact is even more severe for older middle-income Americans. A 60-year-old couple earning $85,000 a year could see their premium payments rise by over $22,600 in 2026. Their health insurance would go from costing about 8.5% of their income to nearly a quarter of it. The consequences are dire. An estimated 4.8 million people could become uninsured in 2026 because they can no longer afford coverage. This isn't just a forecast. In states where open enrollment is beginning, the reality is already setting in. Idaho, one of the first states to open its marketplace for 2026, offers a preview. Insurers there announced average premium increases of 10%. When you combine that with the loss of the enhanced tax credits, the average out-of-pocket premium for Idaho residents could rise by 75%. Some residents are reportedly rushing to get medical procedures done before the end of the year, afraid they won't be able to afford care in 2026. It's a similar story in Colorado, where the Division of Insurance has warned of potential average rate increases of 28%, with some rural areas facing hikes as high as 38%. State officials estimate that without the credits, nearly 100,000 Coloradans could lose their health insurance. This brings us to the political fight in Washington. As of late October 2025, the extension of these tax credits is a central issue in a bitter debate that has led to a partial government shutdown. Democrats, including Congressman Deluzio, are demanding that an extension of the credits be part of any bill to fund the government. They argue that with open enrollment starting on November 1st, families are already seeing these massive price hikes, and waiting will only make the crisis worse. They also warn that as millions become uninsured, the cost of their uncompensated care will be passed on to everyone else, threatening the financial stability of hospitals. On the other side, many Republicans are reluctant to continue the expensive tax credits without broader reforms to government spending.
The White House and congressional Republicans have stated they want to pass a clean funding bill to reopen the government first and then negotiate the subsidies separately. Some conservatives argue the subsidies are a band-aid on the ACA that fuels healthcare inflation and primarily benefits insurance companies. As the political stalemate continues, the clock is ticking. Open enrollment for 2026 health plans is beginning, and millions of Americans are shopping for coverage without knowing if the financial help they depend on will be there in January. The core question remains, will Congress find a compromise to extend these enhanced tax credits, or will they allow them to expire? The answer will directly affect the financial health and physical well-being of millions of American families.